and we're going to go ahead and officially get started for tonight. And I do want to welcome all the new people. We've got a whole lot of new people joining, so welcome. And we're glad that you're here. And again, just really quickly, for those new people who've just joined us, you've come unmuted, and we're going to be about an hour tonight. We're going to take about 25 minutes to do an intro of the fair tax up front. Then we'll take a whole bunch of questions, do our special topic, and then we'll answer all the rest of your questions. So here we go. All right. So welcome, everyone. This is the March 2014 National Fair Tax Webinar. I'm your host, Mark Maneri, and I'm joined by my colleague, Larry Walters. And we've got a big audience tonight, really, really exciting, so thank you for tuning in. You know, one of the things that we love to share about the fair tax is that we believe it is simple, it is fair, and it is transparent. And we're going to show you tonight exactly what we mean by that. And the way that we've designed this presentation is to demonstrate really the things that make our current tax code stodgy, if you will, and in dire need of really needing to evolve. You know, America's great because we've evolved in so many ways, but one way that we're lacking and that we could become a leader is in our tax system. And so if you take a look at this, our current tax code as of the beginning of this year is approaching 75,000 pages. Now, just let that sink in for a second. 75,000 pages. There isn't a person on this earth that can understand and have the capacity to own all that information. It's impossible for a human to do it, right? So, you know, sometimes things are better and they're right when they're simpler. In fact, that's probably a rule to live by. And so the fair tax is brilliant because it is extremely simple. We're going to show you that. So let's look at all of the reasons why our current tax code create drag on our economy, on our country, on Americans, and all of the reasons why we need to evolve away from it. So number one, it's convoluted. It punishes growth and expansion, and it really inspires the wrong behavior. We'll talk about that. There's a complete lack of transparency. Now think about this, 75,000 pages. So interestingly, the people who make money decisions with our tax dollars, i.e. Congress, they actually will never admit this, but they like the 75,000 pages. It's a big shroud that they get to operate behind and maneuver money around without Americans knowing about it. Complete lack of transparency. We'll talk about how the fair tax diffuses that. Horribly inefficient. It impedes privacy. There's winners and losers. So I don't know if you guys remember this, but if we go back to the last presidential election, there was a big thing about Mitt Romney's tax return, and I can't remember the number, but it ended up where he only paid 8% or something, and he was paying less in taxes than many Americans, you know, earning well under $100,000 a year. And there's winners and there's losers with our current tax code. And, you know, the wealthy who get to employ these high-powered tax attorneys get to be the winners, and everybody else gets to be the losers. And it's like this, you know, 1%, 99%, and it just it doesn't make sense for our country. And of course, our current tax system is really time-intensive and it's laborious. So one by one, what we're going to do is we're going to pluck each one of these off the list and share how the fair tax would bring a solution to each one of these and really give some strong credence and merit to why we need to make this move. So here we go. So the fair tax, if you're brand new to this, is legislation that currently exists right now in Congress. It has been reintroduced, and I may get the number wrong, but my colleague will correct me later, Larry. I believe it's been introduced into Congress 8 different times, because every time there's a new congressional session and the bill doesn't become law, that has to any bill has to become reintroduced. So it's been around for a while, is the point that we want to make. And it has gained, it is now in a place where it has more support. It has more co-sponsors, and I believe that number is 83. And again, my colleague will correct me later if I'm wrong, but it has 83 co-sponsors, more than it's ever had before. So we're gaining momentum, and that's very exciting. We've obviously got to get a bunch more, but we're moving in the right direction. So let's look at the first point. So we already showed you 75,000 pages, right? Well, guess what? The Fair Tax is 131 pages double-spaced. You could download it and read it and understand it. The layperson can. Simple is better, especially in this case. So I just love that. So we wanted to put this slide in here. Oops, excuse me. So, all right, let's keep moving. But that's a simple point, but it's worthy of sharing. All right, so we talk about the idea that our current tax code punishes growth. It's incentivizing the wrong behavior. Think about it. When a business or individual makes more money, what happens? The government takes more of it away. So is that an incentive? Is that a strong incentive for us to grow? Now, obviously Americans and, kind of the capitalistic way is to go make more money, but when we do that, we have all these intricate ways that we hide that money rather than reinvesting it back into our communities and our businesses and to our cities and create more growth. So the more money that we make as individuals and corporations, instead of doing a very organic, natural way of reinvesting that back into people in our communities and our grassroots, we hide it somewhere. So we're incentivizing the wrong behavior here, people. We need a tax system that incentivizes and inspires growth. And the fair tax would do that because it's a consumption tax, or what we would call a national retail sales tax, right? It's not an income tax. You only pay taxes on what you spend, not on what you earn, right? And so the way that it works is for all new goods and services, not used goods, new goods and services, you'll pay an inclusive sales tax on that, right? But you won't pay it on used goods, and there's no taxes on our income. So income taxes go away. Social Security, Medicare, FICA, all those taxes that we get withheld from our paychecks, they go away. Estate taxes, death taxes, capital gains tax, alternative minimum tax, they're all gone. We've just funneled it into one central revenue generating platform for the federal government, and that is through a national retail sales tax. And in the end, what we'll do is we'll repeal the 16th Amendment and remove Congress's ability to tax our income. So let's talk about that conceptually again in terms of our economy. Think about this, everyone. This is really, really important. This idea that we're incentivizing the wrong behavior. So now, when we remove taxation from capital gains, from our personal income, from our corporate income, well, all of a sudden the ceiling's gone. We can blow the roof off on it, right? And now, not only are we inspired to make more and expand more, but guess what we're going to do? We're going to reinvest that new income and that increased income back into our business, back into into more human resources so that we can grow faster, back into our communities. We're not going to hide it anywhere. We're going to do with it, and business owners have said in a study that rather than hiding that money in offshore banking centers or tax-deferred, tax-sheltered financial instruments, they'll do what they do with it what they know best. they'll reinvest back into their business to grow it more. It's brilliant. So let's look at, some tangible benefits of this fair tax. So think about this. So I talked a little bit about this, but there's $13 trillion estimated in personal and corporate wealth, assets, cash, parked offshore. That money would be attracted back into the United States, and it's estimated that $1 trillion of it would come back in the first year, organically. We're not going to print that money in the Treasury through some stimulus package that is going to wreak havoc on our inflation. No, we're going to allow market forces to attract that money organically back into the States, because, again, these wealthy individuals and business owners are going to invest it into their businesses, start new ones. The U.S. becomes a corporate headquarter haven. Why? Because our corporate tax rate will be 0. So there was another survey done of companies who were asked would they consider relocating their corporate headquarters here, and the overwhelming response was, of course, absolutely. It's a no-brainer. Like, the tax savings that large corporations would recognize by relocating here would be extraordinary. So there's going to be a huge influx of corporate headquarters that happen here from international corporations, and that's going to mean there's going to be a huge amount of jobs that occur. There's going to be a lot more infrastructure built, so construction's going to dramatically increase, and of course people are going to need to staff those buildings. And so a lot of jobs are going to open up as a result. And the underground economy, estimated $2 trillion now, pays their fair share. So what that means is we've got this really broad base, right? So every time anyone in this country, anyone, legal or illegal, whether they go buy a loaf of bread, a new pair of jeans, a new house, a sports car, anything, it doesn't matter, they pay their fair share. Right? And right now, most people on the webinar probably know this, but only 50% of households are actually paying taxes, right? Well, when we broaden the base and everyone pays their fair share, it's the way that we can. It's really the reason economically that we can create this new tax system, or this new revenue generating system, I should say. All right, so we're recognizing some really amazing financial and economic benefits. Now, one other thing that I want to point out here is, let's go back to the housing crisis that we had and experienced way back in 07, 08, 09. All those foreclosures that started happening. It was estimated, and this number isn't going to be exact, but it's close. I just don't remember the exact number, but it was estimated that around an extra approximately $500 a month would have saved the vast majority of people's houses. They would have been able to afford their mortgage payments. Well, with the fair tax, what will happen is because there's no more income tax and there's no payroll tax, FICA, Social Security, Medicare, all those things, that stuff goes away, and there's no more gross and net pay. You get, if you make $5,000 a month, you take home $5,000 a month, right? So the average American's income is going to increase by 29%. And so imagine what would have happened if we had the fair tax back then, and we were giving people what they earned instead of withholding it. Like that alone, that increase in disposable income is going to be a windfall for the vast majority of Americans and American households. And that's going to allow them to buy slightly larger houses, to spend more money, to save and invest more money, right? It's a brilliant, brilliant economic strategy. All right. So let's knock off the next one on our list. So 75,000 pages, right? Big shroud that Congress gets to operate behind. Well, now we've got full transparency. So we've got one tax, consumption tax on our new retail goods and services. The number is 23%. National retail sales tax. It's going to be on all of our receipts. So let's play this out. You go to the store, you go buy a pair of new designer jeans or $100. The fair tax is inclusive, meaning when you purchase something and it has a price tag on it, you don't pay, in this case the jeans, $100 plus 23%. So you're not going to pay $123. No, you're going to pay $100. It's included in the price tag. And 23% of it, or in this case with the jeans, $23, is fair tax. And the business sets aside, in this case, $23 on every pair of jeans that it sells. And every month, they remit 23% of their gross sales to their state sales tax bureau, which we'll talk about the collection process in a second. And that's it. So there's total transparency. So let's think about this. You're going to get a receipt. You bought these jeans, $100, $77 will be the price for the jeans, and the $23 in this case will be the tax. Well, imagine you go next month and your jeans are, let's just do round numbers, are $101 because the tax went to 24%. You're going to know. And guess what hundreds of millions of Americans are going to do when they see that receipt? It says 24%. They're going to get on the phone with their congressman or woman, and they're going to say, no way, no how, roll it back, right? But the point is there's going to be transparency with it, and Congress can't hide on how they're maneuvering our tax system. Very, very simple. All right, so let's knock off the next one on our list, horribly inefficient. So we'll show on another slide what exactly we mean by that, but the fair tax makes this process really, really efficient. So the states are going to collect from businesses. The infrastructure is already set up because 45 states currently collect a state sales tax. We've already got the system for this, guys. We get 80% more efficient. Second bullet point. We go from trying to collect from 120 million households to 18 to 20 million businesses. Brilliant. Only one state sales tax form to fill out. What are your gross sales? Multiply that times 23%. That's the number that you owe us. Done. Imagine a one-page form for taxes. Are you kidding me? States and retailers are incentivized by their getting back 0.25% for all the money that's collected. And that's how the state sales tax bureaus will be funded. And when they collect all of this revenue from the businesses, they'll send it on to the Department of the Treasury. So there may be a few bumps along the way, as any large venture like this, and any large shift, but you can't argue this. Like, to become 80% more efficient in revenue collection is brilliant, guys. So if you think about this, and let's look at the fact that the IRS right now would be defunded after 3 years, we would literally eliminate it. Cost $13 billion to run. They only collect 75% of what they should. So in other words, for every dollar that they collect, it costs them 25 cents. So it's really inefficient, and the fair tax would eliminate the IRS and create a system that makes it easy for the federal government to collect all that it should. All right, so it impedes, the current tax system impedes privacy based on all of the income documents that we need to fill out. Well, right now, we pay our taxes when we go make our retail purchases. There's no filling out of detailed income forms and all that. So privacy gets protected. We talked about winners and losers. Well, the fair tax creates fairness, right? You pay more based on how much you spend. Simple. And then the other piece that's been written into this legislation is called the rebate, which is a rebate for the fair tax we pay that happens at the beginning of the month into our bank account, and we get reimbursed for the fair tax that we pay up to the poverty level of spending. So let's show you what that looks like. This is a chart. This is the fair tax prebate schedule. So let's move your eyeballs to the right side of the screen. A 2-adult household with 2 dependents, so family size of 4. The Department of Health and Human Services, independent of the fair tax, by the way, the Department of Health and Human Services have set poverty level spending thresholds. So in this case, what they say, the Department of Health and Human Services says, is that a married couple with a family of 4, when they're spending 31 grand and 20 bucks, that's poverty level limit spending. And so when they go out and spend money on, they're going to be spending on basic necessities only, food, medical supplies, housing, transportation. They're going to spend 31 grand over the course of a year. They're going to pay 23% of everything that they spend money on will be tax, right? So 23% of 31 grand is $7,135. Well, if you divide that number by 12, you get 595 bucks. So what that means is every single month that family will get a check or a direct deposit into their bank account from the Department of the Treasury. Actually, the Social Security Administration will administer it. And they'll get reimbursed in advance the money that they spent up to the poverty level limit, right? So hopefully that's clear. So fairness, guys, and a lot of people who demagogue the fair tax and speak ill of it are either uneducated or using the fair tax as a very convenient way to simply say that their opponent wants to raise taxes. It's ridiculous. You're going to see here what this looks like in our special topic. But really important to know that the prebate is this plus the combination of purchasing used goods, taking home 100% of your paycheck, puts the lower income American, all Americans, but certainly the lower income American, in a much better place. So let's talk about the impact on prices for a second. And after this, we'll take a pause and we'll start to answer a whole bunch of questions. And I'll get to unmute my brilliant colleague Larry, who is chomping at the bit to answer all of your fabulous questions. So first of all, right now, think about this, guys. Right now, we actually pay not only an income tax, but we really pay a sales tax too. Why? Because businesses pass off their business taxes and their costs to comply to the current tax code to consumers. It's line item expense in their profit and loss statement is their taxes and their costs to comply to the tax code. So all they do is they raise prices to build in this cost, right? And so we suggest that that is an embedded tax that is approximately 22% of all costs that goes into, on average, all retail goods. Services are actually even higher, but the average is about 22%. And so what happens is, when the fair tax gets passed, corporate income taxes and all costs to comply to the corporate income tax code, they go away for these businesses. So that 22% of embedded tax goes away, and the fair tax of 23% gets inserted. And so what that means is, it's important to know that our prices are not going to increase by 22%. Far from it. We're going to see a marginal increase of anywhere from 4 to 10%, it's estimated, in the first year. And then market forces and competition will drive prices back down to pre-fair tax levels. So that's it, right? But it's really important to know that right now we're paying we're paying a sales tax every time we buy something because businesses are just passing all of their taxes and their costs to comply onto us. We pay it every time we purchase something at the retail market. And we pay, obviously an income tax. So the fair tax eliminates this embedded cost, and income taxes go away, and all we pay is this national retail sales tax. Really, really a brilliant model. So if you think about all of the things that we ticked off our list and all of the reasons why the fair tax evolves our tax system and puts our economy in a much better place, why would anybody not want that? Well, the only way you wouldn't want it is if your income and your ability to maneuver largely come from our current tax system. Now think about it. Lobbyists, 50% of lobbyists are tax lobbyists. Their income, which is 6 or 7 figures, mind you, are driven based on a need for wealthy corporations to manipulate politicians or get politicians to manipulate our tax code, our corporate tax code, to be more favorable on businesses. So when corporate income taxes go away, the need for 50% of lobbyists goes away. So they feel threatened, and they threaten politicians by saying, we're not going to put money into your reelection campaign if you vote for the fair tax. So think about this. We've got, a very small percentage of people who don't want the fair tax to get passed, but they're operating completely out of self-interest. And so if you've got a politician who's running for office that is demagoguing the fair tax, really question that person. Question that person, question their ability to get educated on a topic, and question, more than anything, that they're acting out of self-interest. So really, really important to be thoughtful about that. All right, so before we get to our special topic, as we said, we are going to answer all of your questions. So I want to move right now to doing that. So if everybody would bear with me for just a minute. If you haven't asked a question or written it in, now would be a good time to raise your hand or go ahead and write in your question. I'm going to bring these up right now, and I'm going to ask my colleague Larry to unmute himself, and we're going to go ahead and answer these.
I'm with you, Mark.
Ready to go, Larry?
I am, sir.
All right, good. All right, this first question comes from Michelle. Really, really great question, Michelle. And her question is, when I tell people about the fair tax, they don't believe that the IRS can be eliminated, so they're usually not interested. Even if they do think it's possible, they feel that it won't happen, probably not in their lifetime, and they basically become apathetic. What should I do? What's a good comeback for this attitude? It's a really great question. Larry, I'll invite you to take the first stab at it.
Okay, well, as you rightly identified, Michelle, that is an attitude. And what you have to do, what I do, and I've run across this a lot, I've had people say, I think it's a great idea, but it will never happen. And I remind them that that I thought was an attitude, and that I asked the question, have you ever seen or heard of anyone who had a great idea, but the attitude that it would never happen, be successful? And the answer obviously is no. And usually that's enough to get them thinking about what they have said. And so I don't know why they would make such a comment, but the only thing I find you can do, and the only thing I would suggest you do, is ask them that question. That is an attitude, Michelle. Have you ever seen anybody with a great idea that thought it would never happen make it successful? And they'll look at you kind of like the deer in the headlights, and then they'll smile and say, yeah, you're right, And then you've opened the door, and you can say, what is it about this that you think would not be beneficial? and get them to talk about their thoughts, get them to think and respond. Always ask questions when you can, rather than trying to give them answers for questions they haven't asked. Mark?
Yeah, thank you, Larry. And I want to just add a few things, Michelle. So, sorry, I just getting somebody to write in that I'm too much feedback. So thank you. Thank you for writing that in. I'll be thoughtful about muting the mic when the other person is speaking. Matt wrote in Orville Wright, and it clicked something for me. It's like any great idea that people thought was crazy, somebody on this planet found a way around that. I mean, you know, the Wright brothers. I mean, think about the American Revolution for as an example, right? Like it was, I don't remember the exact number, but it was a very small percentage of the colonists at that time actually wanted to overthrow Britain, but it was enough to move an entire nation. And so, and that's another point. We don't need everyone. We just need the right ones. And Larry, tell me the number, but there's a certain number of constituents in a district that if they suggest that they're in support of the fair tax, like it will really turn the politician's head to the point where they have to listen. What's that number?
The number is 3,000. If we get 3,000 voters in any congressional district, that is enough to change the outcome of the election. And of course, what we're really talking about is primaries, because that's where we can get rid of the dead wood, if you will, get rid of those who are not really looking at their position as one of service for their constituents, and how can I do something that's right for America, but they're looking at it from a selfish perspective. So with 3,000 constituents, voters, we've got a chance to change the outcome of that election. Mark?
Yeah. A bunch of questions just came in. How do we get the 3,000 voters? Yeah. And really a question that Tyler wrote in very beginning is, how do we get this legislation off of Chairman Camp's desk? He's, for those who might not know, he's the House Ways and Means Committee chairperson. And it's a great question. And really the answer to both is what we're doing. It's you people, you that are writing in and taking the time to take responsibility for the direction of this country and getting educated on this. That's what it takes. It's grassroots, guys. If enough people make noise, in this case it's 3,000, we have the opportunity to change the course of an election. You know, it's doable. So what is it going to take? What is it going to take to get the legislation off the desk? It's going to take enough co-sponsors that put pressure on it. What's it going to take to get those co-sponsors and alter the outcome of an election? It's going to take grassroots. What's it going to take for that? It's going to take this. It's going to be people like you who did what I did. So let me give everybody a little history here. I was sitting in an airport. I'll never forget this. It was back in 2005, I want to say. And I saw somebody reading a book that had the letters IRS in it with a big circle around it and an X through it. And they were reading the first fair tax book. And I thought, huh. I walked into a bookstore in the airport. I bought that book. I started reading it on the plane. I met my wife for a vacation in Mexico, and I couldn't take my eyes off of this book. I got back, and I got back to Orlando, and I thought, you know what? This is something that I can't let somebody else figure out. I got to get involved because it's too important for the sake of my future and my kids' future. And I made a personal decision to get involved. I went to the FairTax website. I looked up grassroots. I saw who was the leader in my community, and guess who it was? Larry Walters, my colleague. And now here I am 8 years later leading the National Fair Tax webinar. Are you kidding me? I never could have imagined that this is what I would be doing, but it's important enough and it's meaningful enough to me to make a difference, to invest my time and my money in it. And so I do. And so I had the attitude of, I'm not going to let somebody else do it. And that's what all of you on this line need to do if we're actually going to do something. And I want to say something. The vast majority of people that listen to this say, oh, great idea, but they don't do anything. Well, I can't motivate you any more than give you the information. You've got to take action. So I'll get off my soapbox now, but that's the difference maker right there. All right, let's answer some more tactical questions. Let's see. This is a longer one. I talked to the Heritage Foundation today and found out that they promote the flat tax, and the girl I talked to was unaware of H.R. 25 and the Fair Tax Bill was going to be voted on sometime this quarter, potentially, and she didn't know hardly anything about the fair tax, and I'm wondering, how can this be? I thought and assumed that all conservative organizations knew about the fair tax. Similar to what we're talking about, but Larry, do you want to respond to that?
Yeah, but this kind of gets under my collar a little bit. Listen, just because they claim to be a conservative organization, you have to remember that there are different degrees of conservatism. The Heritage Foundation is not as conservative as we would like them to be, and so they are also funded in large part by the lobbyists and by the by some of the representatives themselves through memberships. And as long as they are relying
Muted.
on people who want to protect the income tax, they're not going to be doing anything that's going to do away with the income tax. That's the best I can say. So we just can't trust them all. Look at Americans for Tax Reform, ATR, Grover Norquist's organization. They're supposed to be a conservative organization. Grover Norquist has the petition out that he tries to get representatives and candidates to sign pledging never to raise taxes. And he has a lot of power because he's funded by a couple of billionaires. But they are not conservative enough to support the fair tax. They have support for the flat tax or an income tax. The flat tax is a tax on income, in case you're not aware of that. So we just have to be aware of who it is we're talking about, and don't be too disappointed when you find your favorite conservative organization is not that conservative. Mark?
Yeah, thanks, Larry. By the way, Larry, just go ahead and mute yourself and then unmute. There's a few people saying that you're echoing a bit. There's some feedback on your mic. I'm not hearing it, so let's just see if we can try to make it a little more manageable.
Okay, I've heard a little bit of that too, but I thought it was from somebody that might have had a telephone open or something like that.
No, I've got everybody else muted, so just mute yourself and then unmute. Let's see if that works. Michelle asks, how would this affect nonprofits? It's a good question. It's actually a great one to answer. Nonprofits, Michelle, are going to recognize a spike in their donations. And you might think that's counterintuitive, but the reason why 95% of people contribute to nonprofits is not to get a tax benefit. It's because they believe in the cause. So that being true, and the average American income going to go up by 29%, Americans are going to have more disposable income than they've ever had before in the history of this country. So with that in place, nonprofits are going to get a lot more donations, and they're very excited about this. Okay. Under the fair tax, will it add 23% to my cable bill, electric bill, insurance payments, etc.? No, it will not add 23% to those bills. Now, because remember the pricing. And I'm realizing, David, that this question was written in before I went over pricing, but remember, the embedded costs, so in other words, corporate income taxes and the cost to comply to the federal income tax code, go away. The 22% goes out, 23% fair tax goes in. prices are going to marginally increase by 4 to 10%. So your cable, electric, and insurance payments may go up a few percentage points, but you're going to be taking home a lot more money, and so your net is going to be dramatically greater, even if prices across the board marginally increase a few percentage points. And then we expect those cable bills, electric bills, and prices on everything to come back down in a year or two to pre-fair tax prices because of competition. So hopefully that's very clear. Yeah, Larry, I'll ask you to unmute yourself. You usually have a good explanation for this. What about internet sales? Currently, there are many sites where you don't have to pay a sales tax. Can you speak to that? Go ahead.
Sure. Under the fair tax, internet sales will be taxed. And if you think about it, folks, look around you in your neighborhood, in your community, and how many small businesses have gone out of business because of the fact that we have internet sales businesses where people, many of them are not even buying the merchandise they're selling. They're just brokering it. And because they have no overhead, they can have a lower price. And if you happen to be in a state where they do not have a physical being, a brick and mortar facility, they don't have to charge you a sales tax. A lot of states are working to change that. But the fact of the matter is with the fair tax, it taxes everything. There are no exclusions, except as Mark pointed out earlier, for used goods and services, or used goods, and for education. Those are the only exceptions to what will be taxed. Mark?
Yeah, thank you, Larry. And that goes to another question, is food taxed? Yes, food is taxed, but again, food would be, if you want to think about it, it's a basic necessity. It's one of the first things that regardless of income people are purchasing. So literally, you know, poverty level spending is spent on food, and that comes back in the form of the prebate every month. So everybody gets untaxed when they get their prebate when they spend money on food or any basic necessities for that matter. Does the prebate require income verification? No. Take everything you know and think about with respect to income and throw it out the window. Income matters zero. There's no more income impact about anything anymore. With respect to taxes, of course. Certainly credit and financial institutions are going to want to see your income, and that speaks to a question that I'll get to about accountants. When accountants lose their job, they're not going to want to support this. Well, accountants, and there's a smaller percentage of accountants that only focus on taxes. And think about this, you know, mortgage companies and credit and financial institutions that need to verify income, you know, there's going to be a huge need for this when our W-2 and income taxes go away, because we're not going to fill out tax returns anymore, income tax returns anymore. We don't have to deal with that BS anymore. That in and of itself is a brilliant reason to make this shift, right? We save all kinds of time, energy, and effort by not having to fill out and think about tax returns and tax implications. But at the end of the day, we're still going to need to verify income in order to extend credit to people. And so tax accountants, there's going to be a whole industry created for this, and it's a seamless transition for tax accountants. So no, the prebate doesn't require income verification. And it's every household with a valid Social Security number gets the prebate regardless of their income. All right. So, sorry, I'm just going through these. Let's do a few more questions and get to the special topic. Is there any differentiation in the prebate for people with no earned income, i.e. Medicaid, food stamps, housing recipients who are not paying for those things? No, no differentiation, as I just said. So anybody with a valid Social Security number, their household gets the prebate. Really good question from Michael. Does the fair tax generate an equal amount of income compared to what the IRS collects now? The answer is yes. It's considered revenue neutral, and then obviously as the economy grows, which we certainly expect it to, then it will start collecting more. So yes, revenue neutral. I should mention, by the way, that the largest independent study on taxes ever done in the history of our world as we know it today was done by the folks who charged and put together the fair tax. So $22 million of independent third-party research was done, and 80 brilliant economists, won a Nobel laureate, put this research together in order to create this legislation. So at any rate, it's tied largely to GDP, but at the end of the day, they came up with the number 23% would generate the same amount of income that the government collects today. So really good question, and thank you for stimulating that thought. Okay, Larry, I'll get you to speak to this one if you want to unmute yourself. What would be the impact on home sales and interest rate and the like? You want to speak to that?
Sure, Mark. That's an interesting question, and I'm trying to track down this feedback that I am hearing myself here. That's an interesting question, and the answer is not simple. In the first place, new homes will have the embedded fair tax as part of the sales price. Used homes, of course, will not. So there's a couple of times we heard people say, well, that means that there's going to be a onslaught for people trying to get new homes, and that market will hurt the new home market. Well, the fact of the matter is that there are only so many used homes. That's the first thing. And when they're all bought up, what are people going to buy? New homes. Secondly, there are many people who don't want a used home. They want to get a brand spanking new one, and they'll pay the money for that. So when a new home is bought, typically another home is put on the market. So you almost have a one-for-one transition there. Now we have to remember that, as Mark noted, there are embedded taxes, corporate taxes, and compliance costs in the prices of everything we buy today. As it turns out, the construction industry has the highest margin of embedded taxes, 25%, not the 22.5% that Mark might have noted. So when that 25% goes away and the 23% fair tax gets included, the pricing is still going to go up a tiny bit, but it's not going to go up so much that it's going to make the new home out of the price range. Now here's the kicker, the third part of this. If the new home builders find that the used homes are creating too much competition, what does competition typically do in our economy? It causes a lowering of pricing somehow or another. Well, the builder doesn't necessarily have to lower his price, but he can offer more for the same dollar amount, can't he? He could offer a large screen TV. He could offer a home which is already pre-wired internally for the computer networks and the smart TVs that are going to be going into the new homes. So there are several ways in which the builder can make his home more attractive for the dollar to the buyer. And bottom line is the buyer rules, and the market will level out, and regardless of what little kinks we might see initially, as homes get sold and resold and new homes get built and offered at better prices or with better features, the market will level out and we will be doing just fine. The fact of the matter is also that because of the new homes being built, there will be an increase in construction labor required, which is jobs, and our economy will again get another kick from that market. Mark?
Yeah, thank you, Larry. One last thing, and then let's talk about our special topic. I also want to acknowledge that I have seen a lot of new questions come in. We love it. Keep them coming. We'll stay past 9 o'clock. We'll answer all of them. But we're going to get to our special topic here in a second. Last thing I want to say about the housing market too is this. Look, guys, can we be honest with each other? We live in a consumption-based country. Like it is keep up with the Joneses, right? You know, I know that's not the values of everyone on this line, but largely as a nation, we're spenders, not savers. I mean, let's not ignore that. And there's incredible amount of data around that. And the bottom line is when, you know, Westerners, especially Americans, feel like they can get more quality and something bigger, better, stronger, faster, et cetera, for their money, that's what they spend it on. And we're going to have Americans with more disposable income than they've ever had. Do you think for a second that home builders are worried? Are you kidding me? They're extremely excited. Retailers are extremely excited about the fair tax. People are going to have more money in their pocket. They're going to be able to qualify for more home because they keep 100% of their paycheck. I see the new construction market going off the charts, and as a result, the access to capital will come down, and interest rates will likely come down because of that influx. So those are my thoughts on it. It's just my opinion, but it's what I expect to happen. All right. So we got a lot of questions of people said, well, what about when, how does this hurt the little guy, the guy that really struggles, the lower income American? Let's help me understand that. So let's take a look at that. We mapped out some numbers. We want to manage your expectations in advance that these numbers are not perfect, they're not exact, they weren't verified by a professional tax accountant, but we did take real numbers. So let's look at it. All right. Okay, so let's just go through this for a second. So let's say you've got a lower income American who earns $31,000 a year. They're married, got a couple kids. They're making approximately 16 bucks an hour, which is 40-hour work week, puts them at roughly 31 grand. So based on the 2013 IRS tax chart, the first $17,850 is taxed at 10%. The rest of it would be taxed at 15%. And then they've got 7.65%, which is their payroll tax withholdings, right? So they've got $8,543 withheld on a monthly basis. That is roughly $750-something. But their take-home pay, their net pay, becomes $22,477 over the course of a year, or $1,873. Now, look, we know that these aren't completely perfect. It's going to depend on what withholdings they claimed, and all kinds of the child tax credit, and all kinds of credits and factors that go into our very convoluted system. But this is in this very black and white world of what the current tax system suggests would be withheld or would be taken away. And then we suggest that in this lower income person's economic world, that they're going to get a refund equal to whatever it is that they paid in taxes. And again, the numbers aren't going to be exact like this, but it's going to be pretty close, actually. All right, so just stay with us on the numbers. So let's say we've got this lower income American that's grossing 31 grand. They're only taking home 22 grand, and at the end of the year they get this lump refund check of about 8,500 bucks. All right, so this would be somebody who's operating right at the poverty level. And we know that the Department of Health and Human Services sets 31 grand as the poverty level limit for a household of 4. All right, so now let's take a look at this person under the fair tax. So under the fair tax, their income is 31 grand. No taxes are withheld. There's no refund because they're not doing an income tax anymore. That goes away.
Mark?
Their net pay, yeah, go ahead.
Are you supposed to be showing the next slide?
Oh, did I? I'm so sorry. Thank you for piping in here. Okay. Thank you, Larry. Let me actually go back. So this was the lower income person. So you didn't see this slide, did you, Larry? Oh, you muted yourself. I assume the answer is not. Sorry about that, everybody. I paused the slides and I forgot to play them.
Yeah, I saw this.
Okay. So we've got the 31. Here's what's being withheld. Here's their take-home pay. And then we're suggesting that they got this refund again. All right. So now we'll move it on to the next slide. Okay. So now we've got this income of $31,000. But remember, no taxes withheld, no refund. Their net pay is going to be equal to gross pay, 31 grand. But now take a look at this. Instead of bringing home, I'm going to go back, only look down here, $1,873 a month. Now they're bringing home $2,585 a month. Now they may spend more, but their taxes that they've paid are going to be $71.34. But remember, because of the prebate, they're getting that money back, which is the money you see on the next slide, a total of $71.40. That comes in the form of $595 every single month. So they've got extra spendable money of $71.40 and a net tax paid of negative $6. That's $71.40 minus $71.34. So look, you ask yourself, would this person be better off taking home only $1,873 a month and getting some lump sum once a year, or would they be better off taking home $2,585, right? And getting this new income every single month of an additional $71.40. So dollars to dollars, this puts a lower income American in a much better financial position. So I'll ask Larry just to unmute himself. Is there anything else you want to speak to this, Larry?
No, Mark, this, ladies and gentlemen, over the last couple of days, I developed a new appreciation for the complexity of the income tax system. I was going to try and do a tax return for this hypothetical low-income person, and I didn't know which form to use because I use a more complex tax return. So I went to the IRS website, and sure enough, there's a question there that says, what tax form should I use? And I clicked on that, and I started getting a series of questions. And some 5 or 6 or 7 pages of questions later, I was still answering questions, and I still don't know what tax form I'm supposed to use for the most simplest return. And I said, I realize it has to be complex in order to cover so many bases, but from my perspective, when I understand what the fair tax is going to be like, when none of us have to file a tax return again, none of us have to pay to have it done or to struggle through our own hours to figure it out and submit it ourselves, that's a blessing that I'm willing to pay for. And I don't care if the prices go up 15 or 20%. It's still worth losing the aggravation. Mark, there's just, today I tried another approach. I took TurboTax, and I thought I'd just take a simple return and let TurboTax guide me through that. And even with TurboTax, I went through a series of questions. I still don't know what form I'm filling out, but I'm answering question after question. And most of them are simple, but some of them I cannot answer without going and researching something else. So the income tax has got to go. The fair tax is a very, very simple and clean answer that will benefit each and every one of us, some more than others. The good thing is that it doesn't hurt anybody. And the research that was done, and I'm addressing now the what's in it for me thing. The research that is done is that the lowest income people, well, first of all, no current federal income tax payer has as high a tax liability under the fair tax lifetime as they do under the income tax today. And the way the fair tax has been structured, the lowest income people get the greatest percentage of benefit. The middle income people get the next lower percentage of benefit, and the highest income people get the lowest percentage of benefit, but they too still have a benefit because they save so much money in what they don't have to do to file a federal income tax return and to go through the compliance costs with the lobbyists and the attorneys and whatnot to figure out how to legally avoid paying income tax systems, and they don't have to send their money overseas anymore. So there's a lot of great benefits, and all you have to do is really understand it. And once you thoroughly understand it, you will absolutely demand it, and no one will be able to back you down. Mark?
Yeah, thank you, Larry. Yeah, actually, I just want to address this as well. Somebody wrote in, actually Wayne wrote in the example of the lower income person being better off under the fair tax, you did not talk about the Social Security and Medicare taxes that would be deducted and would not be refunded. I'm not sure I actually understand that, Wayne, but under the fair tax, of course, there are no payroll taxes, there are no Social Security and Medicare taxes. And this actually speaks to another question. Somebody wanted to know, is it enough to fair tax enough to fund Social Security and Medicare? The answer is absolutely yes. In fact, the fair tax is going to save these two programs because it's going to spur an economy that grows and generates more revenue for the federal government so that they can keep funding these programs. But the answer to that question is, and that is Mark's question, yes, the fair tax was included to pay for and fund Social Security and Medicare. All right, so let's go back to the questions. We got about a dozen questions here, guys. So stay with us, and if you have more, go ahead and write them in. We're going to be probably about another 15 minutes or so. We'll try to be efficient. This question's from Michael. When do the House and Senate bills become active enough for us to start writing letters, emails, and phone calls to our reps? You know, I don't actually know if there's a specific time. They may very well be a strategic time to write the letters, emails, and phone calls, but the bottom line is, you know, we really want to be doing it on a regular basis. So it's not just one time write a letter and say, hey, do this. It's like, you know, every week write a postcard, write a letter, do a fax, do a phone call, etc. I don't know, Larry, from an election standpoint or from a strategic standpoint, take yourself off mute. Is there a specific time when it's more strategic to do the letters, emails, and phone calls?
Well, certainly during an election season, and you know, if possible, you ought to be getting an appointment with your congressman and your United States senators and talking to them face-to-face about why they don't advocate the fair tax. Once again, it's a matter of asking questions. Make them come to you with some good answers that you can take stock in. There's no better time other than now, I think. And then again, when the new Congress goes into session, which would be in January now of 2014, that's the time to start again. So the time between the election results and the new Congress, you can take a break, enjoy Thanksgiving and Christmas, and then get on the trail again. Because each congressional session, we do have to start all over with new co-sponsors. Usually, a lot of the representatives who were reelected and who were co-sponsors will sign the bill before it actually gets introduced to the floor for the new Congress. And we've experienced a growth in that each year for the last couple of sessions also. So we are making headway. and it's going to be something that if you're in the age bracket that I might be in, it's not going to benefit you as much as it's going to my children and my grandchildren. But if you're younger, if you're in your 20s or 30s, you've got a lot of life to live, and this is going to benefit you and then your children. So look at it from that perspective. What can you do for your family? What can you do for your children? Mark?
Yeah, real good. Thank you. All right. There's a couple of questions. How do we know when Congress is voting on the fair tax? One website you can go to, everyone, is called PopVox. P as in Paul, O, P as in Paul, V as in Victor, O, X. PopVox. PopVox.com. And that is a website that has all of congressional bills that are being voted on, and is a way for the consumer, the average American, to go there and see, what's being voted on, and it allows you to go and actually vote and support it, and that's a very influential website. So it's a great way to go and support the fair tax there. So all the federal bills live in there, and you can vote for it, and politicians look at that, and it gets them to see, what do people know, and what are they supporting. So that's one way you could do it. All right. This comes from Mark. When you purchase an item, the 23% is already in the price, not an extra charge. That's correct. It's inclusive. Michelle asks, why not do away with the prebate and just not tax food? The reason why, one of the big reasons why, Michelle, is because by untaxing or by taxing everything, you eliminate loopholes, or the possibility for loopholes and for more lobbying. Because once you untax an industry like food, well, then you've got related industries that say, oh, well, I should be untaxed too. Why not just untax all basic necessity goods and services? Now we need to untax clothing and medical and housing, and you open up this huge can of worms, and all of a sudden you got the same lobbying problem that you have right now. So the prebate is used to create fairness by untaxing poverty level limit spending, but it's also very strategically levered as a way to eliminate lobbyist influence and just tax everything. So I trust that answers your question. David asks, is this a federal and a state tax? No, just federal. And so what will likely happen is that most state government entities, state governments will likely follow suit, and they will eliminate any state income tax, and in some cases even conspire with municipalities to remove property taxes to have one state sales tax. In fact, there are some states right now that are very close to doing that, which would be a brilliant model for the federal level. But the answer to the question is no, it does not address state sales taxes, just federal sales tax. Riesel asks, you say that corporations like cable companies, they'll no longer pay corporate tax, but most companies will not lower the prices just because their expenses are going down. Why do you think that would happen? I don't think that will happen. I think what we know is that businesses will likely increase prices by 4 to 10%. What we suggest why the prices will come down is because the economy is going to be much more robust, and the greatest competitive factor that you can have to beat your competitor, besides making your service more quality, is to lower your price. And so the fair tax will inspire that because the economy is going to become much more robust. So that's why we believe prices will decrease eventually, is because of competition. Okay. Matt asked the question, is the message of the fair tax not only you'll have more money to spend, but how to spend more responsibly? No, that's not the message. It doesn't address government spending either. You know, that's a whole separate animal. It's just an evolved way for our federal government to collect money to run itself. So I don't know, Larry, do you want to speak to any more of that?
And the first thing I would like to say is that why do we want a government agency to tell us how to spend our money?
Right.
So the answer really is no, the fair tax does not address how to spend responsibly. Only that you will have more money to spend or save, and that you don't have to file a tax return every year. But as an individual, that would be up to you to do it for yourself and your family and to teach the same to your children. Mark?
Yeah, thank you, Larry. After passage of the fair tax, David asks, how long will it take to start? 1 year. 1 year, and then on January 1 of the following year, you've got no more income taxes. So that's it. Pretty straightforward. We love that. Yeah, Grady points out that education is exempt. That's true. That's actually the only exemption. And he says when buying a computer, for example, a student, for a student, how will the retail outlet selling the computer know that it's really for education and not charge the fair tax? Larry, how would you respond to that?
How about a duh? Actually, the computer, I don't believe, will be tax exempt. The education that is tax exempt are your tuitions and books and services provided by the university. Now, if the university is selling the computer as part of their supplies, then it may have an exemption on it. But to buy it from an outside retailer, it would not be exempt. Mark?
Yeah. Thank you, Larry. By the way, Mark points out that you can go to fairtax.org as a way to get involved, find grassroots, find local leadership, reach out to them, and you can also order supplies and bumper stickers and car magnets and lots of things to pass out. So thank you, Mark, for sharing that. All right. How is the fair tax different than a national sales tax? It's a good question, Ron. You know, obviously, as I've explained, the fair tax is rooted in being a national sales tax. That is exactly what it is. But then it has some nuanced areas written into the legislation. For example, the prebate. So the prebate reimburses poverty level limit spending for all qualifying households. So there's a difference. Is there any other differences that you could easily point out, Larry, as far as simply a national sales tax?
No, the fair tax is a national sales tax with some implications that make it fair, whereas normally a straight sales tax would be considered a regressive tax on the lower income people. The fact that the prebate is available takes away that aspect of it. And one of the big objections we had from those who are more concerned about or very concerned about the plight of the lower income people. But it is basically, as Mark said, a national sales tax, and it's been written around that such that, as Mark explained, it has it treats a lot of different issues to help keep things in balance. One of the cornerstones of the fair tax is that it treats everybody administratively exactly the same, and that means there are no no special deductions for goods or services, and there are, other than the education, which is considered an investment in human capital, and then unused goods. The other, another cornerstone is that nothing will be taxed more than once. So with some of those items in place, it makes the fair tax something that it should be very easy for everybody to swallow, if you will, and understand how it is beneficial but not detrimental to anybody. Mark?
Yeah, thank you, Larry. Bill asked the question, what will happen to people who owe income tax at the time the fair tax is passed? I'm not sure. Do you know, Larry?
Yes, that's why we give the IRS 3 years to clear up outstanding debtors, and they've got 3 years to collect that money from everybody that they can. But after that third year, they are totally defunded, and they have to go find work elsewhere. Mark?
Yeah. Gary and I have had a little chat dialogue here, and he suggests that large tax accounting firms spend $800 million in 1 year to defeat the fair tax. I'm unaware of that. Are you aware of that? And do you know whether or not accountants as a whole, Larry, would support the passage of this bill?
I've not heard that, so no, I am not aware of it. Is it possible for the lobbyists for the CPAs or the National CPA Association of America, or whatever they call themselves, who would be a lobbyist firm, to get behind opposing the fair tax? I would not be surprised at all. That's why the National Association of Realtors are behind opposition to the fair tax. And that is, what do? They are a lobbyist. What are we doing? We are putting tax lobbyists out of business. And so we can expect that kind of opposition, Mark.
Yeah. All right. Well, we've done it again, Larry. We've answered all the questions. We want to thank everyone for answering or just asking really brilliant questions, for staying with us the whole night, and really taking your time to be here, get educated. We've given you a lot of information. If you're new to this and it resonates, don't let this be your last webinar. Bring someone here the fourth Thursday of every month. Go to the websites that you see on the screen right here, and get involved. Go to fairtax.org. Oops. Go to fairtax.org. Look under grassroots. Get involved. Invest a little bit of money. More importantly, invest your time. And just talk about this. Just talk about it. That alone could be a great way to take responsibility to help spread this word. So we'll see you on the fourth Thursday of April with a guest. And I want to thank my great colleague, Larry. Thank you again. You're always brilliant, and I enjoy you. Thank you. And thank everyone for being here. We wish you a great evening, and spread the word. Have a great night, everybody.